This is the Tony Elumelu Business Management Training Program, Module 7, Discussion Group and Practice Session. Table of Contents. This module will cover business plan lectures and discussions, tips on writing business plans, financial statements. Overview. To succeed in your chosen business, writing a good business plan is important. It is said that if you fail to plan, you plan to fail. A lot of people consider business plans as only a necessity for financing as required by banks. More will be derived if it is also used as a working document for business implementation for startup and to fast-track sustainable growth for an existing business. This module is designed for business owners and entrepreneurs who are ready to create a business plan. All the essential steps are covered, including identifying the audience, gathering information, researching, describing product plans and marketing, as well as sales and accounting terms. Objectives. At the end of the training, participants will be able to define business plan, understand the purpose of a business plan, discuss features of a winning business plan, understand components of a balance sheet, discuss components of income statements, explain statements of cash flows. Business plan definition. Business planning is a process which forces the entrepreneur to consider objectively all elements that contribute to a successful enterprise. A good business plan is a planning tool that spells out goals, strategies, and objectives in a systematic, realistic, and honest manner. A guide for operations and performance measurement that will serve management in the implementation of the project. A financing document that will obtain for the enterprise the necessary funding, provided it is well researched and documented, and the financial projections and assumptions are supported. Planning cycle business studies include startup, initial public offering, competence, governance, performance improvement, expansion or cross-border, crisis management, tax planning, succession planning, exit strategy. A winning business plan. Executive summary. Pay more attention to the executive summary. This may be all that top management may read for decision making. Therefore, ensure that it includes the following: project description, market, product capacity, total projection cost, financing plan, financial projection, financial and economic performance indicators. Conclusion. Financial statements. Financial statements refer to a specific set of reports produced in an entity's accounting system. The objective of these reports is to provide information about the entity. A complete set of financial statements includes 5 components: statement of comprehensive income, statement of changes in capital, statement of financial position, statement of cash flows, notes to financial statements. Components of a balance sheet: non-current assets in business, current assets, net assets, intangible assets, for example, goodwill. Long-term liability in business, current liability. The distinction between debtor and creditor, the retained earnings. Income statements, also known as the profit or loss statement or the statement of revenue and expense. The income statement primarily focuses on the company's revenues and expenses during a particular period. The income statement focuses on the 4 key items: revenue, expenses, gains, and losses. It does not cover receipts, that is, money received by the business, or cash payments or disbursements, that is, money paid by the business. Cash flow statement. This is a financial statement that shows how cash and cash equivalents flow in and out of a business within a particular period. In other words, it helps ascertain if a business engaged in any cash transaction during a given interval from which it settles its debt and takes care of other financial, investment, and operating activities. Key takeaways. Here are key points to note in this module. A cash flow statement is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving a company. The cash flow statement measures how well a company manages its cash position, meaning how the company generates cash to pay its debt obligations and fund its operating expenses. The cash flow statement complements the balance sheet and income statement and is a mandatory part of a company's financial reports. Conclusion. Every business needs to have a written business plan. Whether it's to provide direction or attract investors, a business plan is vital for the success of your organization. Financial statements are used for many different purposes by many different parties inside and outside the business. Clearly, all successful business people should have a good basic understanding of financial statements. Financial statements contain critical business information and are used for many different purposes by many different parties inside and outside the business. You have completed this module. You will find the resources and exercises for this module in the course description section. Thank you.